Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Hey, we got a data that you guys are going to be really surprised with. We're turning Japanese, and it's not in a good way. You're not going to enjoy nice sushi rolls. In fact, we're going to basically be going into a recession, guaranteed, no exceptions. We're going to show you why. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, I love all things Japanese. I love the food especially. What I don't like though is their economics.
Yeah, so this is the Harry Carrier Seppuku move that's coming. If you have the chart up already, so it's kind of interesting. Yeah. How are we drawing the line from to Japan to real estate? Well, because we're setting up the same way what happened to Japan in 1981. So what's really interesting that what's happening here in our economy, Phil, is that, and we hear it all the time. People say, oh, what do you mean real estate's doing just fine? Nobody's selling, nobody's foreclosing, because everybody who locked in, okay, that doesn't have an event is not going to sell. But that doesn't mean it's good for real estate. Okay, the entire infrastructure supporting real estate is collapsing. And you can see it most clearly here with realtors, okay? The realtors have been plummeting. They went negative, okay? And every time the realtor number has gone zero, okay, from a big pump, we've gone into recession. So we had one 1991, okay, and that was the financial crisis, okay? That's also when the Japanese economy just turned and burned.
Right.
Then we had it in 2000 with the .com, 2008 in a huge way because they used real estate to get out of the .com disaster. And then they've been trying to keep real estate as a toy to keep people alive here, and we just collapsed again.
Right.
But this time is way different. I think this is going to go, I think we'll beat the 1991 recession, Phil, because unless you and I have to buy or sell our house, we're in our house.
Right.
And so prices aren't going to come down enough to attract new buyers. Unemployment is going to be going up, which means there's less buyers that are going to be able to afford it. Financial conditions are tightening. That means people need to put more money into real estate to get loans. And also basically the affordability of the home is predicated upon good rates, and they're gone.
Right.
And so what's interesting to me about this, not so much the realtor thing, is at the same time we're discussing yield curve control going into 2024. They don't call it that. They call it something else. They have this weird name. They call it the not QE, liquidity thing, which was such a joke.
Treasury buybacks.
Yeah, that's amazing. But in 2024, Janet Yellen should have amassed excess funding from these bond auctions she's doing in excess of what they're going to need. And she's going to use that money then to buy down overpriced debt into, not overpriced, but overpriced to her, and try to buy it down, which I'm totally for, so the government can have reasonable funding for their, instead of paying it as interest expense. But what that means, number one, is that she's going to be taking more money into TGA than people expect, which is going to drive, the stock market down. And then number two is that they're only going to use this as kind of like a bumper car, Phil. We're going to do yield curve control just to keep us from imploding. And so it's going to be really interesting. In Japan, I think they're just coming out of it now, Phil.
Mm-hmm.
Literally now they just created inflation. And when people always get confused, there's a difference between cost of living and inflation, okay? Inflation's a monetary event. Cost of living is your ability to pay for things. And we're going to get that separation again. Because in Japan, people people didn't make enough money to buy things. Okay.
Right.
So they were getting deflation at the same time. The government was blowing out their deficit, but they drove interest rates down to zero. So it just didn't matter to them.
Yep.
And that's what's going to happen here. I tell people all the time, I would be shocked if we're not down to a zero bound again in the next couple of years on the treasuries. I would be shocked if we're not down there.
No, I totally agree. And you know, as far as like the negative realtor growth signaling recessions, I mean, it's highly accurate, right? Like you said, 1990s, early 1990s, I kind of remember because it was a hard time for construction, especially if you were in the higher end stuff, and it was primarily in Hawaii, luxury Hawaii. A lot of it was Japanese driven. So Japan money was coming in, buying up real estate, you know, building multi-million-dollar properties. It was good times. And then when the Japanese real estate bubble collapsed, you know, everything stopped. And I find it very similar to our situation now. What fueled that then was, you know, low cost money, right? Free money. And that's the environment we've been in until recently. And they kept trying to force people. I mean, literally the banks were trying to force people to take loans to keep that growth going. And what ended up happening was commercial real estate started to implode. Exactly what we're seeing right now. You know, commercial real estate is imploding. And, you know, people think that the real estate market on the residential side is somewhat protected because there's an army of people with 2 and 3% mortgages or so. Well, the problem with that is you're underestimating how much of the properties, even the properties that are financed at those lower rates, are secondary, you know, homes that, you know, a lot of these people, some people have 3, 4, 5 homes that are Airbnb. And if they're not cash flowing, that's where your sell pressure is going to come. So if you have, usually you don't ever see commercial real estate implode without it affecting the entire spectrum of real estate. And of course, you know, real estate can be niche in local areas. You know, they can be resilient against a broader drawdown. But by and large, you'd be foolish to think that the real estate market, you know, as far as residential goes, is going to ignore what we're seeing in commercial real estate right now. So it's more of a leading indicator. So if you're on the fence about selling, I think, you know, you need to move forward with that. Either that or you're just, you know, going to be into your property long term. And if you're a primary homeowner, then that's fine, right? You can wait it out. But if you got secondary or more properties that are at risk because you're trying to cash flow them, I would be concerned about holding on to them going through this. And highly likely you're going to be able to sell here or buy back a lot lower. I mean, that's exactly what happened in the 90s. That's exactly what happened in the 08, 09 bust. Literally, you could have bought back in the market 2 years later and made probably 50%, right? So I think it's a similar situation, Bob. And it's just funny because it's the same thing. The sentiment's just not there. Like no one's really like, oh, we got to sell tomorrow. Like nobody, there's no fear that I can see in the real estate markets right now as far as like, gee, we need to get out of this market. Like everyone's really, really, really complacent in real estate and really, really complacent in the stock market. And I just think it's, everything's lined up just like the data has been showing us. It's just a matter of when does it start to finally just tick over. And I think that's where tomorrow's video will show them the graphs of how the signals now are coming in at the very tippy top here of this move that are extremely reliable about putting in these local tops essentially, and perhaps maybe even the major lower high in this market.
Yeah, and look, you can't underestimate, look, in California, too, the major home insurance companies are leaving the market.
Yeah.
So home insurance rates are going to go higher.
Yep.
Property taxes are going to go higher. They're going to raise the rates.
Yep.
On people because the counties aren't going to get the money in to feed their pension and medical costs. And then the next thing that people are talking about is that you're going to start seeing people trying to beat back rent control. So, you know, it's not a time to be a renter, okay? I mean, a landlord. And
No.
Like you said, that's the marginal money coming, you know, out of these markets. And look at that crazy guy from New York City. He wants to pass a law with a lottery saying that you have to take in a legal migrant.
Yeah.
I mean, this is how, you know, people say people aren't insane. Well, we saw COVID, so we can see insanity. It's definitely not out of the bounds of what politicians are willing to do to maintain power, and it's going to come out of your pocketbook. So just be careful.
Yep, agree. All right, guys, well, let us know your thoughts. Do you think this time's different with this chart? Let us know. Thanks for watching. Please hit like and subscribe, and we'll see you on tomorrow's video. You're not going to want to miss it. Very important data. See you later.
Trade Genius.